Hello, everybody. So today I want to talk about a few stocks through which you can get exposure to Anthropic. And of course, unless you've been living under a rock, you probably have heard of Anthropic. Anthropic, of course, has been well known for many years, but it's essentially been all the rage for the past 2 weeks. You have a lot of haters of Anthropic. They have an issue. They had an issue with the Pentagon, so named a supply chain risk. You have Musk making fun of their logo. Go figure, that's a Musk style. But you know, there's no denying that Mythos has taken the internet by storm. Anthropic, of course, very good with coding, very good with vibe coding. You may remember also Claude+, which was loosely based on using the Claude trademark and the Claude model and all that sort of stuff. It's taken the internet by storm. This company has taken the internet by storm. Some people are calling it AGI. Some people are calling it a sales pitch. What I know is that if Powell and Besant had a special meeting about it and about the risks that this could cause to the entire system, about what they call the zero day hacks, like the hacks that you didn't know were there. It's solving like hacks that hadn't been solved or flaws in software that hadn't been found in more than 27 years for one of them. Absolutely outstanding from what I hear about this model. Turns out a lot of people are concerned about quantum computing. AI may be a bigger deal than quantum computing in some respect, at least at preventing these companies or altering the security of these companies. And so, yeah, some people have called it AGI. It's a very impressive model. And from what I understand, many people are comparing this company, Anthropic, of course, to like a Palantir on steroid. Even some people saying that they may actually displace some business from Palantir. Of course, they do different things, so I don't really think so. But, they do totally different things. But people, there's a general fog around Anthropic, and there seems to be a convergence of evidence that indicate that they are a winning model and that they may be winning the AI race, or at least accelerating much faster than the other ones. And OpenAI should release its next generation model pretty soon as well. So we'll see how that is. But right now, Anthropic is kind of winning. But anyways, we can argue about the solutions, right? We can't really argue about the growth. The growth is unprecedented. So of course, it was a 9 billion ARR closing of 2025. The business was 9 billion in ARR. As of last week, I think they said that last week, they have now reached a 30 billion ARR. So the revenue, and it's from a big base, remember, a 9 billion base. The revenue has 3.5x in 4 months. So the ARR is now 30 billion. You 3.5x your revenue in 4 months from a $9 billion base. So that's stunning growth. I mean, annualized, you're looking at well over 10x in growth, well over 1,000% growth annualized for this company. Turns out it's growing faster than ChatGPT back in the early days. When you look at this, it's pretty stunning. The last fundraising, by the way, that was in early February, that was 380 billion. Of course, this company is much bigger now than it was 2 months ago, and so I don't think I'll be faulted for saying that it could probably be worth about 500 billion now, given that the revenue has maybe 2.5x since February of 2026, and this new model is obviously not priced in. This Mythos model that some people are calling AGI, that model is absolutely not priced in. So let's assume the business at the next funding round, let's assume valuation is 500 billion. That's the number I will use, 500 billion as an assumption. And then I want to go through a few companies that own some Anthropic and look at the value of the stake. So a first pick number one. And by the way, many of these companies have a lot going for it. So it's not like Amazon. There's dozens of reasons as to why you would want to invest in Amazon. Maybe you like the retail business, they're getting into groceries. Maybe you like AWS and how fast they will grow, right? Maybe you like Project Leo and how they are trying to compete against SpaceX. There's so many things you could like about Amazon, right? Maybe you like their chips. But the point is Amazon has a pretty big stake in Anthropic. And so maybe you like Amazon because of a big stake they have in Anthropic. Amazon owns about 19% of Anthropic. It seems like Amazon has quote unquote not bet the farm, but they've bet a lot on Anthropic. That's $95 billion. Amazon is a $2.5 trillion business. 95 billion divided by 2.5 trillion. Anthropic's stake as a share of Amazon's market cap is 3.8%. If you buy Amazon, you could think of it as I'm getting 3.8% exposure to Anthropic. And that would probably, if it was an ETF, right, it'd be like a top 10 on Anthropic. But you're not getting a pure play exposure here. You're pretty remote still, right? You're pretty remote from the action, but if Anthropic 10x's, that could actually be an insane value for Amazon, right? It could be 900 billion, and keep in mind on this channel we know that there will be $10 trillion businesses, right? Nvidia, my bet, is the first business that will reach 10 trillion. I think will be Nvidia, but we are fully aware of monetary printing and the devaluation of the dollar. So anyways, Amazon is pick number one. There's a lot of social media influencers who have actually discussed Amazon because of Anthropic and their Anthropic stake, which is an impressive stake, by the way. Okay, pick number two. Pick number two is Google. Google estimates its stake in Anthropic is about 70 billion. They own about 14% of Anthropic. Google, the stake of Anthropic has a share of Google's market cap is 1.8%. So this is less. This is way less. This is becoming less and less interesting. Now, of course, if you look at Google, Google does a lot of AI leading things, including Gemini, including AI mode, including Waymo, of course. They own 7% of SpaceX. Google does a lot of things. They have their own chips. They are a hyperscaler. They have YouTube for training. Like there's a lot of reasons to love Google. Anthropic is just another reason to like Google, but as far as wanting pure play exposure to Anthropic, you're not getting it with Google. It's a little better with Amazon. Now, let's move to a stock that I did not select. Not a pick. Microsoft. Microsoft is not a pick because Microsoft, from what I understand, only owns 1.4% of Anthropic. It seems like Microsoft, of course, has bet the farm on OpenAI. They own almost 30% of OpenAI. I wouldn't have made that bet given how much aura ChatGPT has actually lost, if you really think about it. We don't hear about ChatGPT anymore too much these days. We hear about Claude all the time. Claude. So, that's not my pick number three. Three ways in this video, right? What is my pick number three? Surprise! You're going to be surprised with this pick. Zoom would be my pick number three. And in my view, Zoom is kind of the best way to get high exposure to Anthropic. So why? Zoom invested $53 million in the Series C fundraise. And so that was a long time ago, back in 2023. Okay, my best research right now, as I search this and converse with AI, my best research is that Zoom currently, despite the dilution of the Series D, despite the dilution, they currently could still own as much as 1.2% of Anthropic. 1.2% of Anthropic. So Zoom's stake in Anthropic is close to the stake of Microsoft in Anthropic. Okay? And so if I value Anthropic at 500 billion, 1.2% times 500 billion, that's $6 billion. And by the way, that is in line, that number, 6 billion, is in line with reports that I've seen from analysts. For example, Baird saying in January, so think about that, that was 3 months ago, saying that Baird thinks it's worth between 2 billion and 4 billion. And keep in mind, they have to be more conservative. I'm assuming it's worth more than that, right? That's 6 billion. Anyways, if I use my number, 6 billion divided by 23.3 billion, which is the market cap, that would mean that 26% of Zoom's market cap is accounted for by Anthropic. Anthropic is more than a quarter. The Anthropic stake that Zoom owns is more than a quarter of Zoom's value. That's pretty impressive. 26% of Zoom's market cap is accounted for by Anthropic. This is insane. This is much closer to a pure exposure, but it gets even better. Zoom has 7.8 billion of cash. They have zero debt. So why wouldn't I use this time enterprise value? So enterprise value, of course, 24 billion is the market cap. You remove the 7.8 billion of cash. Enterprise value is 15.5 billion. 6 billion, that's Anthropic's value. The value of a stake, the value of a Zoom stake in Anthropic is 6 billion. I divide it by 15.5 billion. I explain 39% of the enterprise value of Zoom via the Anthropic stake. The Anthropic stake explains 39% of the enterprise value of Zoom. And if I were to be even crazier and try to assess the over 61%, would I be interested in buying a business, buying Zoom for the over 61%? And you will see how dirt cheap Zoom actually is going to look now. Zoom is trading at an Anthropic adjusted enterprise value, so market cap minus the cash, minus the value of Anthropic stake. It's trading at an Anthropic adjusted enterprise value of 9.4 billion. 9.4 billion. Is that a good price for Zoom? Is 9.4 billion a good price for Zoom? Would paying 9.4 billion for Zoom be acceptable? Well, let's see. Trailing 12-month sales are 4.869 billion. Gross profit is 77%. Adjusted EBITDA is 26%. Keep in mind, Zoom is a company that has been going through a valley of despair for years, and they have optimized the business. They went from the hottest stock on Wall Street to forgotten stock, and this business has been heavily optimized for survival. It's been optimized for buybacks, actually. It seems like a lot of the capital allocation plan of Zoom is to just slowly buy back the shares, and you'll see that the stock has been going up a little bit. It's held up pretty well. It's been fairly stable stock over the past few years. But I think that's going to change if the market starts realizing they own so much Anthropic. I think that's going to change. Anyways, would it be acceptable to buy Zoom, a business whose top line grows by, let's call it 5%? I mean, it is 5%, right? 5 to 6%. They gave 27 guidance. That was a little optimistic. Let's say 6%, a business that grows at 6% revenue growth. So, of course, a business I wouldn't be interested in normal times. But the question is, from a value standpoint, is this acceptable? Anthropic adjusted enterprise value divided by sales is a 1.9x. That's very cheap for a 77% gross profit business who has mostly recurring revenue, right? And the churn, keep in mind for them, the churn is under 3%. So they have a sticky product. Okay. Anthropic adjusted enterprise value over gross profit is 2.5 times. That's too cheap. And then lastly, Anthropic adjusted enterprise value divided by adjusted EBITDA is 7.5x. That's essentially the valuation of a mall, of a shopping mall, or of a GM, or something like that. It's trading only at 7.5 times cash flows, future cash flows. So it's too cheap. It makes very little sense, especially in my view, because they have mostly recurring revenue. They have very slow growth, but it's still some growth. And I listened to actually the CFO. She did like an investor conference. So I listened to the whole thing, and she was making a very good point that communications change, but and of course AI can talk to AI. But if you were to look at something that's likely not gonna go away, is the desire for humans to talk to other humans. The desire for humans to talk to other humans. And that's kind of what Zoom enables. So even though it may have been categorized as a software business, it's inherently different. It's closer to a network, right? It's a network of people who have the app. And of course, they have a big call center business. They actually also have a big solopreneur business, so people who need to talk to teams, to suppliers, etc. And want to have these person-to-person conversations that are not going away. So I think the business is actually pretty sticky if you think about it. And by the way, they have dedicated power users. If you evolve in a corporate world, you may know that Teams is absolutely hated. People dislike Teams in general. People really dislike Teams in general. I mean, I mean, you gotta look in for your outlook. Keep in mind, like the one thing that didn't work in the Artemis 2 mission on going to the moon was Outlook. Outlook didn't work on like that was the one thing that didn't work is the software. So of course Teams has obviously taken a lot of business away from Zoom because they throw it in for free. But you're always going to have a segment of people who are power users and who don't want to use the quote-unquote free option from Microsoft. And then, of course, they are focusing on pragmatic AI tools. So AI transcripts, AI sales pitch, right? And AI that helps you sell better on the phone for these call centers who have to sell stuff. So to me, this is not a dead business at all. I think if you were to take into account the fact that 39% of the enterprise value is explained by a business whose sales have how many x'd? Whose sales have 3.5x'd in 4 months. So 39% of that can be explained by a business that has grown so fast. So to me, that's underpricing. I think the market will notice that Anthropic stake at one point. I think. And the margin of safety, I see it there, especially when they have so much cash on the balance sheet. So anyways, I'm not a value investor, obviously. I'm not a typical value investor. I'm also very aware that some of the part analysis has its limits, and it's possible sometimes that a company doesn't get to realize the value of their VC investment. And in the case of Zoom, they're essentially unique. They're only essentially VC investment. I mean, they have other ones, but that's most of the value. Like, I'm well aware of that, but it looks like Zoom is going to have to mark up the Anthropic value that they hold on the balance sheet. They're going to have to mark it up by quite a bit, by billions, if you ask me. That could be a catalyst into the stock, and I think the market may start to notice, especially if Anthropic goes on to be that giant model that everybody's very excited about right now, right? And also, there's risk protection to the downside. One of the overall conversations of these AI labs, as they're called, whether it's Anthropic or OpenAI, is you have a lot of people in government who say these edge models, right? These cutting edge models are too dangerous and they need to go under some form of government control. Well, if that were to be the case, that'd be a catastrophe for the value of, say, an Anthropic or an OpenAI. But would it really hurt a Zoom, given that Zoom is mostly unnoticed anyways? Probably not, right? So the underlying business kind of acts as downside protection. It acts as downside protection with all of the upside still intact if Anthropic is actually what it's hyped up to be, which I think it is. I'm leaning towards like 70% it is, Anyways, this was not investment advice. This is not financial advice. This is not AI advice. This is not investment advice. This is only entertainment. I'm hoping you are entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.